Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm back. I'm showing you the chart of the Russell 2000 up here. This is the daily chart. I'm just going to spread out. This is the one that I sent the video out last night. I was concerned why we went above this, and sure, there was your answer right there. There's your 1.618 expansion. There's your 78% retracement. And if you look at this on the weekly chart, you'll see it quite easily right there. There it is right there at 229. 22.29. If we look at this on an intraday, let's see if we got anything related to a 382 retracement on this today. I've got to get this ready here, refresh, see if we got anything. We might have got something in here. This is just an 8-minute. Let's go to a 4-minute just to see if we got one. Remember, these are really active markets now, folks, so you've got to be ready. Yeah, we did get one right here. I mean, you got to be ready for this or you're in big trouble. There's your high up there at 22.90. You see, we did make the 382 retracement here, and now we're coming down. We're getting ready to take out the lows of earlier this morning, which is quite a bit. So anyway, I just wanted to bring some of these to your attention. But when you're looking at these stocks like this that have such weighting in the Dow Jones, remember the Dow Jones is price weighted, not cap weighted. That's the main thing. Hold on just a second here. They're calling me over here to turn something off. I just get this up here. Hold on 1 second here. All right, now give me 1 second here to take a look at these others that are looking at. Turn this off. I want to talk to you a little bit here about the gold market because we've made brand new highs in the gold. You'll see all of these. This is our weekly. You can see all these numbers that we had up here. I alerted you to the fact that we had this ABCD pattern coming in right there. So let's just look at that on the daily, and you'll be able to see it here. There's the ABCD. Remember, this is a daily. The other one was a weekly. And we're going to blow it up so we can see it. ABCD will be right where it should be. All right. Here is your low for the day right here on May. You come up down into June, and you measure to 24.72, and the high has been 24.88. It missed it by $16, and now it's trading at 24.60. So, I got a problem. I can't see the charts. They didn't tell me this at TFNN. So just a second here. I'll get it right up here. 1 second here. Change the window. Boy, thank you, Michelle. You saved my bacon one more time. Appreciate it. All right, let's get this up here. Okay, Michelle, let me know that you can see it. Would you just give me a little tickle on the Skype, Reno, whatever it is? I hope we can see it now. I'm not hearing anything from TFNN, so I don't know what's going on. They got so much happening there. Anyway, I hope you can see it. I don't know whether you can or not, but that's neither here nor there. All right, let's see. Still can't see the charts, huh? Well, I'm doing everything I think I did right, but evidently that's not working, so I don't know what to do. Hold on. Let me try it one more time. Well, I do it exactly. I hit the charts. I did click the screen. It says stop screen. We're going to go change the thing, okay? I go up to the screens, I hit the screen, and I hit the screen, and I hit go live, and boom, there you go. Maybe this is it. I don't know. Okay, all right. There's what we're looking at here. We were talking about this. You can see there's where we are right there. All right, I got it, folks. You can stop Skyping me. All right, there's the number we were looking at today. Let's take a look at if the AI was doing any help to us today. And, brother, hold on just a minute. Was looking for a down day, of course. And we did, well, here's the old 382 again, folks. Just banging on the door. There's your high, and there's your low, and there's your 382 right there. Took 10 minutes to get there, but there it is at 76. When you got these big ones coming down, that's what this is a major high in the gold today, folks. On this little, remember 72 was, we were looking at it. This last little ABCD was at the very end that, went right up to it there. There's your ABCD on that one, ended at 88. If you can do in mini charts, which I wasn't doing that today, but anyway, that's what we're paying attention. Big stuff is happening, folks. That's the main thing that we've got to be looking at. The main thing, folks, I was wrong about the NASDAQ timing, but boy, I really tell you something. This thing's looking bad. What happens if Goldman Sachs and United Healthcare has a bad down day? What's going to happen there? Remember now, we're down 70 handles from the high in the S&P and $20,000 in the NASDAQ. And get this up here on the weekly here. There it is right there. You can see here, this is a number we were looking at. The high was 208.99. Here we are now, 900 handles lower than the high. So let's just look at it from a daily basis to see where our first sign of support will come in. We'll move that over here to where we are. This is where we are. Just clean these out a little bit here. Folks, this market is not, oh my gosh. This is where you want to cover your short down in here, folks, right there, because that's known in the trade as a bad tick. Let me try to correct that. And there it's corrected. Okay, now this is you can see the strength of this down move, right? Now you can see it's way past ABCD, okay? So you know that you're going to be having probably close to a 78% level right here, okay? So that's also, there it is right there. There's your last line of support right there at 2,000 even. We've hit 2,029. The low has been 2,000 and bada bing, bada boom. I don't know, but it's pretty close to that exact number here. Folks, we have to plan. I don't know if it's going to be the NASDAQ. It's probably better to do the S&P. Even with the Russell the way it is, the way they can run that with just 200 stocks and the Russell stocks. I'm pretty sure the Russell stocks are cap weighted, but I don't know that. Those of you that are out there that are a lot smarter than me, if you know if the Russell is cap weighted, please let the old cowboy know. I would certainly like to know if that's going to be the case, because it's going to be interesting to see what's happening here. Okay, now let's take a look at one of our favorites over here. Well, I can see why hold on a second. I'm reading my mind. I was watching a small chart on the Goldman Sachs, and that's what caused the YM to come back. Here's where we are on the crude oil, folks. We had this big move down yesterday. You see we came right down to the 61% retracement. We had all kinds of support. I mentioned this in the newsletter, in the video last night. A lot of support. Well, there was 786, and a huge move to the upside. Now let's just, and I haven't checked this, folks. I'm going to check the AI to see if it did any good today. Wow, it looks like it's been inverted most of the day, because it certainly doesn't fit. All I'm going to do now is do the mirror image of it, and then when we get back, we're going to take a look at a couple things like treasury bonds, grains, and also the U.S. dollar. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to switch over to the Treasury notes and Treasury bonds. We're going to do the notes. You'll notice here on this little pullback that we had here, I'll show it to you with the bonds too, but you can see we made the 1, 3, 5 pattern. And now you can see notes have broken above this way back in June. We have not done that yet in the bonds. Let me show you that. We're going to get up here and move it out of the way here. Here are the Treasury bonds have not taken that out. You remember now, this high on the notes was all the way almost down here where this held up well. There's your 1, 3, 5 pattern. This says, if this is correct, and we're almost ready to break it out on the upside, is we could get one more leg here without any trouble at all. And that would take us up here to this 123 and change, or 122 and change, which is 2 points away from where we are there. Now, what we need to do now, that will take out this high way back in March. So what we need to do is go to the weekly and make sure that March low is going to be watched at. Here is the March high right here that we just looked at. So what it looks like, and you can see we're starting to pop up here. We've had this drawn for quite a while, so we're still moving. When you take this and blow it up just a little bit more and look at the big high way back here where we had the huge rally, and there you would take it there. Oh, brother, you're going to be looking at something other here. We're going to go right up to this 61% retracement again, also through possibly getting up here to 123. Okay, talking about big markets, folks. Look at this month. You guys remember, been with me a long time. This is when they were trying to tell us about, ABCs don't work. This is the same picture we're looking at in the Dow Jones right here. Let's rephrase that. This is the same picture we're looking at in Goldman Sachs and United Healthcare, not the rest of the stocks. And just those two are enough to get it up to where it is right now. There was the big pattern up here. This was negative interest rates, right? Everybody fell for that. There was your 382 retracement. There was your bottom in the bear market, and that's all that is, folks, is a bottom, because this is an extremely bearish pattern, folks. I have to I'm going to refresh this for just a second here. We could get to this level right here, which is that's the 382. No, it isn't either. That's changed. I've got to change that. There it is from the high. There it is right there. There's your 382 right here. If we get to 139, okay, Just look really, really far north as you can get up where the reindeers are and look at Santa Claus and say, thank you very much, Santa, but I'm going to take the short side of this right here if you get there. Folks, that's $20,000. I don't know how it's going to get there given how much money we have to spend every month just to service the debt, almost $1 trillion of our $34 trillion in debt. So that's it in the bonds. That's why we look like we're still moving up. This is data problem. We got that all taken care of. All right, let's move over here to the U.S. dollar here. I want to get this up here, see where we are, because we came very close to one of the things we were talking about just the other day, folks. Get ready to start selling this puppy because we're almost there. This is the British pound on the daily. We did get up to a 1.27 expansion, but we're looking at this level right here at 131.53. Looking at this on the weekly, we should be able to make it. You see, there it is right there. We should be able to make it. What we did now is just take that out. We're just having a little bit of a tiny, this is 50 points off the high, so no big deal. But if we look at the euro, and we're going to do that right now, here's the euro. Euro's not nearly as strong, but it's still strong. It's up to where we thought we'd get to. Oh, we're almost there, boys and girls. Oh, get ready to hit the old cash register on this one. Hold on here a second. I'm going to do a couple of videos on this over the weekend for sure. There's your AB right there. There's your CD coming in right there. And how close are we? Get the drum roll, please. And the number comes in at, oh, we're not very far away. We're about 60 pips. So what's that number up there? 109.81, boys and girls. You can put your little Cupid doll on that, hit the sledgehammer, make it go up and hit the top of the bell, and you'll be living in tall cotton, as they say. Anyway, let's look at this and use the other side of this to look at the dollar index that they're saying is the demise of the dollar index. And I do not believe that's happening, because if we're topping in the euro, the dollar index has got to be what, boys and girls? You're right, Johnny. It's got to be bottoming. And there we have it right here. Oh, my goodness. ABCD on the horizon, just like we see. This is the mirror image, folks, of the euro, because the euro is 56% of the U.S. dollar index. So what we're going to do now is we're going to draw in. I know you love to see these ABCDs, but that's all I got, boys and girls. Ain't got nothing more than that, and that's right there. Well, a couple little things. Anyway, that dollar comes in at 102.91. That's equivalent. They're 60 pips down. That's equivalent to the euro. And you should trade the euro. That's at 109.81, folks, in the euro. That's the number we're watching in the euro. 109.81, right there. And I wouldn't risk more than 50 pips on that. That'd be a $500 risk, but that should have a pretty good run. We've had a really strong run here in the euro, folks. Look at this. Since the 24th of June, for 3 weeks, we've gone from 106, which was we talked about that several times. There was the ABCD pattern right there. Haven't been involved in it, but that was it. I probably should have been. There it is right there. There's your bottom right there, 106.63. I know we talked about that. That's Mother God and Country stuff. So get ready. Get another chance up here. Christmas Day's coming, folks. 109.81. Let's get the limit minder in here so when we get to 107, we're going to be able to have time to put in the old order, and we'll see how that's moving along here. Okay, now let's take a look at one other of the currencies, and that is the old Japanese yen. It gets beaten up quite a bit, but it's coming up here. Oh, no, don't tell me it's gone. Here it is. I thought somebody took it out of the playbook, but it didn't. Okay, here is oh boy, they've hammered that. Son of a gun. I thought that was going to happen. I had all the targets up there. Let's refresh this. This is the data problems I've been having, folks, with that storm that we had. There was your number here. We went quite a bit higher. 106, we got to 162. We had a double top in here, and then we had the big break to the downside. Let's look at this on a 4-hour to see if there might have been that little 3-lettered thing that we love so much. 382, and I have to refresh this too, so this will take just 1 week. And there we go, and we'll move this out of the way and blow it up. Oh, I'm sure we did. There was your high. Here was your big break. That's over the weekend. Here's your high. There's the big break. And staring us, I can see your card, Johnny, 382. I see it. But, Johnny, you're wrong. It's about 0.46. It's almost 50%. And then, of course, the difference between these is 30 pips, so it's not really much there. But there's your chance to get in, and you can see we're heading down, and that tells us that, where we're going is lower. That's going to be down to the 1.618 level, and we're only seconds away from the master himself, the Wizard of Naples, Florida. None other than Norman, who calls it to the minute Winsky, will be our guest and will revive me and relieve me from my duties here as a broadcaster for TFNN for another 25 or 30 minutes, and I know I can hear the sound of one hand clapping right now. We'll be right back with Norman, who calls it to the minute Winsky. Stay tuned.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I have some very serious news to report. Norman's not able to reach us today. He's too busy making money. So we're going to go in and look at a few things. We're going to look at the MAGA stocks, okay? First one, these are in the newsletter. We're showing you the patterns, just A, B, C, D, just simple stuff. That's Apple. Okay, now we're going to look at NVIDIA. Remember, NVIDIA had that beautiful Gartley up here at 135. It's now 117 and falling. So that's one of the reasons why the NASDAQ is down so much. Let's get this highlight. Ooh, there it is right there. Okay, and next one we're going to take a look at is Tesla. It's not a MAGA stock, but anybody that gives a prospective president $160 million, no matter what party it is, has a really strong feeling. But here's what you want to watch in Tesla, folks. This is really important. This is just a 4-hour chart, but that's enough to get several days in. You see the A, B, C, D right there coming in right at the 382. If Tesla is good, and I have nothing against the car, I won't trust a car that I can't hear. So anyway, there it is right there. This is going to be really strong support there at 231. If we get below 231, we got all these gaps to fill. So that's what you want to watch in Tesla, 231, if you like that stock. And believe me, it has a lot of gaps in it, so it's a big player. So, all right, now here's Broadcom. Here it is again. Oh, that can't be right. It must have split. Yeah, it had to split. That ain't down that much. Yeah, let's just go. Yeah, Broadcom had to split, and since I don't know how to handle splits, yeah, I'm going to have to take that off the list because I don't know how to do that. Here's Google. Remember we were looking at Google at 200. There, 200 was the high. We're now, 195. The high was off by half a cent. The high was 194.90. We're now at 182. I think it was Amazon made the $200 level. Yep, there it is, $200. And see, this ABCD is not so bad, folks. It's not 100%, but, the only thing it's 100% are death and taxes, and you can beat taxes if you die. There's your ABCD right there at 200. The high was exactly 200, so it missed it by 50 cents, so don't count that one. That was a failure. All right, now here we've got SMCI, which is another semiconductor. It's moving lower, pretty much as expected. It gapped down. And this is a sign we're heading lower in some of these things. I feel sorry for, what's his name, Zuckerberg. He's down to his last 200,000 billion or whatever he has. Ooh, that's a big drop. That's a huge drop in this. See, well, it didn't make it went way above the ABCD here at 53. It got all the way up to at 23. It got all the way up to 41, taking out these highs. Your key here was when it didn't keep going and then went sideways and took out these lows. That means everybody that bought it in here was in trouble. This stock's got some problems. I don't know. Maybe I know what he wants to do. He wants to buy Twitter back. That's what it is. Was his company Twitter? Oh, I don't know anything about it. Better shut up and think yourself a fool than to open your mouth and remove all doubt. Here's Softy. The ABCD pattern was 463. The high was 467.73. We're now trading $25 under that in just 2 weeks. Looking at this on the daily, let's see if we see anything really interesting. It's a couple gap down. Oops, it's not gap down. I just have to refresh for a week, and that'll finish it up. Yeah, we have a gap down today. So something happened today with the market gapping down. So we're going to move on to that. Now let's get on with something you guys may have an interest in, and we're going to look at the grain markets here. Let's get it up here right now. What I do, folks, I have these set up in groups so that when I do the letter every weekend and the new videos at night, that I'm able to access them pretty quickly. Now, we're out of July beans now. We're into delivery on that, so we're going to get some of these that we want to watch. Now, we're still heading down in the November beans. Okay, now let's just get this up here because I think there's a bottom, but maybe not in our lifetime. Okay, uh-oh, something's wrong. Just a minute, let me second. There it is. Okay, now we're up to date. You see, it just keeps dropping and dropping and dropping. I can't see anything to buy. I mean, the last buy was right here. And, we're down 37 cents from that level. Here's where we were last Monday with that little tiny ABCD. So I just don't see anything. And even on the long-term weekly, remember, we should have said it should have stopped right there. It went through there like it did. Wait a minute. No, just a minute. Refresh. 1 month. Let's see if we're down here. Oh no, we're not even at the there. There's the last ABCD here, folks. Is woo, we're close. We're close. Shut the front door and raise the wind. Take a little time and look at this one. All right. I don't like doing weeklies, but boy, we got to do that when you see this number right there, 430. Okay. All right. Let's move on here. 1 second, please. There's what we're looking at. I have that drawn wrong, so let's just double check that we do it correctly. Let's clean it all out. Okay, this is the weekly chart now, boys and girls. Now we want to keep that in because we want to see that we've already gone through the 1.27 expansion. Okay, now we had an ABCD right here in May. Okay, and this is when I thought we'd have a little bit of a pullback and then a nice big rally, and boy, they're still throwing vegetables beyond that one. Anyway, but that didn't work. So let's see where we are now, because we're only the 17th of July, and these beans really start pollinating now between the 3rd, about 5 weeks from now. So hot weather in 5 weeks changes the whole ball game, and it measures to $10.32 a bushel. We are trading at $10.43, so that means it's 10 cents away. So what we're going to do is we're going to go down to the daily chart, and we're going to put that on the old. There's the number right there. That's what we want to be watching. Hold on, let me get this up, refresh it. 1 month will do it. Yeah, we want to get this ready because here's where we want to be looking to buy it here. I'm going to put it in here so everybody can. I have to take a shot here, folks. You're going to be a farmer. It's not going to cost you a lot of money because you're going to buy the beans at 10. What am I doing? I shouldn't be doing this. 10.33, and you got to put $500 on it, boy. 10.40. 10.23 will be the stop. So you're going to buy at 10.33, sell at 10.23. That's not a bad deal. Now, if you look at this on the daily too, we'll just move this around. Remember, this is a weekly number, so we're going to verify it by looking at this. You can see these ABCDs on the way down. There we go. There's AB. Shut the front door and raise the rent. Got to clean that one out. Here we go. There's AB. It's only a 2-day rally, but you got to count it because it was substantial. Comes right to there, and then you got one more right behind it. That's this one right up in here. Sorry, guys. Just got to take this high right here. And we're going to draw it down from there. Bear with me here. We'll be right back. Hold on. We'll get this number right. Bear with me. Oh, that's already through it by quite a bit. So this is a weekly number if you want to do it. 10.33 with a low of, this is $1 a bushel from where we were back here, folks. Are you kidding me? That's a lot of money in beans. All right, let's take a break. Thanks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to look at December soybean oil here. This is, still made higher bottoms. It's not like the rest of the things totally collapsing. We are setting just about exactly at the 78% level. We haven't quite taken out the low here of 3 days ago. This is going to be at 44.01, or 15 cents. That's $90. That's really nothing. So I want to see how this holds. I'd like to see this hold for a day or two. And if beans get down to 1033 in the November, which is part of the December oil will be crushed from the November beans, and that means it should hold this level right here. Failure to hold this, you're going to be looking at a much larger ABCD to the downside. Folks, we have a thing going on in the grain markets that we haven't seen in many, many years. And it's almost analogous to the 1930s when they had the Dust Bowl, and that's when you couldn't even plant the stuff. There was no, and yet no one had a market for it because nobody had any money. So I don't know. Anyway, I'm just looking at this pattern right here in the oil. It has a tendency to go down and make a new lower low like it does here. Okay, just for a little bit. See how it makes a little bit lower low right at that number. We got to watch to see if it holds. That's only $90 from where it is right now. Too late in the day now, but keep an eye on it. What you might want to do is to take a look at the soybeans November at 1033 when the oil is working like this and buy the stronger of the two. So let's play the devil's advocate. Soybeans are at 1033 making new lows on the weekly basis, and soybean oil is still in this area right here. Buy the oil. That's the one that's the strongest, okay? Buy the strongest, sell the weakest. You can't go wrong doing that ordinarily, but not all the time, okay? So let's move on here. Take a look at the old wheat market. They beat that up so bad, I'm not sure. I'll do December corn here. Since Norm's not here, we got to do them all anyway. This is the weekly chart on December corn. Going back a long time, you can see the number of times. It's been 4 years since we've been below $3 or $4 a bushel, and we've hit that right here. Now we have I believe we have completed the weekly pattern here, or very, very close here on the corn. There's your A leg right here. There's your B leg right here. There's your C leg right here. D leg, yes. That was at 412. We're trading at 411 right now, folks. We've made lower lows here, but it's actually held this level relatively well. So that's a pretty good sign. It's holding up relatively well. Let's just double check, see the 1.618 comes in here. So we could be bottoming. See beans, and let's take a look at the wheat. They've beaten the wheat to death, but I'm sure we've got one here. It is right there, Mr. Wheat. It's actually starting to rally today. Holy cow, we've actually got a rally, almost a 382. Also here, we got an ABCD going. Just a second, I got to correct my data one more time. Come on, there we go. Okay, there's the data from the last few days. Now, This was actually happening when the stocks were going nuts to the upside. There's your A, B, C, D on the bottom. There's your A, B. There's your CD right on the bottom at 50. The low was 50 3/4. That's about as perfect as you can get. Then there's the pullback. We've had a pretty good rally up in here, so we're going to see what the 382 off of this number is, because that's the big one. That's only 5 days ago, but when it drops like a rock, that's still a valid 382. So let's see how close it did. Aw, shucks, that one didn't work either. Golly, folks, I'll tell you. I owe Tom Bogard that son of a gun. That boy doesn't work all the time, but man, pay attention to it. Okay, let's move on here to the next one. We got question. Oh, questions popped up in the room. Hold up, I'll get it up here right now. And that is about, hold on a second. Where is it at? Where's it? G. Google, where is it? Right here. International Business Machines. Hold on one second. Okay. Here's IBM. This is a stock in the Dow Jones, and as you can see here, it's up today too. It's gapped up quite a bit. Let's clean out all this so we can look at it together. Here's where we are. Well, we've made many ABCD. Ooh, this is another one here. Ooh, got to get ready to start selling that YM, folks, because that thing is going to be ready to have it. There's a 186. Let's see what the old 618, it's already above that. I can eyeball that and tell you that we're already there. So that, if you look at this from a technical standpoint, there is drive 1, there is drive 2, and there is drive 3, and it's still going up. So it's already past the target, but it should have gone right here to 80, basically 85.59. It's 86.99. The high today has been 87.30. So this is be the area where you're looking at it, and we have another daily ABCD right in here, smaller one, but we'll count it. There's AB equals CD. Yeah, this is the area. We're a little above it today. Let's take a look at it. It's probably rallying today as we speak. There's a 4-minute chart. I don't know if it'll even give me the data, because I don't think it will. No, it won't, and it shouldn't, because I don't really do stocks. I just pointed that out. Oh, remember the one that one of our listeners gave us, which was JBHT? Let's see what it's doing to the. By golly, he was right. Son of a gun. We told you this on Monday, folks. There's Monday right there. Monday, Tuesday, Wednesday, Thursday. This is Wednesday. There's Monday, Tuesday, Wednesday. There it went. It went from Monday. It went from 165 to 175. Now it's 163. Okay, and that's the end of that too. And if you don't get out, then by golly, who knows? I cannot reveal the name of the person until he gives me permission. But you've heard him many times on here. That's the first time he's ever. In fact, I said to him, "This is the first time in all of my years of trading that I've gotten, and I mean that sincerely, folks, on the eyes of my children and the love of my mother, I have never gotten a tip that worked." And folks, if you got it on the wrong day here, you're still in trouble. So I don't know. I just in the book by Jesse Livermore, Edwin Lefevre, do not be a tip taker and do not be a tip giver, because that's not it. There's a story in there about Old Westlake, and I was living in Westlake Village. I've read that book 50 times. And Old Westlake would come in about once a week giving tips to everybody in the little trading room there on Wall Street, there in the Chrysler building, and everybody, they were complaining like hell. Stop him from coming in, and Livermore had to set him down and say, "Guys, don't you realize what's happening?" And he says, "Why?" He says, "Every tip that he's given us has worked." And 4 or 5 of the guys, "Are you crazy? Every one of them failed." And I said, "That's because you didn't do the opposite thing." And that was the reason behind it. Sometimes these people that are telling you things in the news are not correct, believe it or not. Just remember that. That's always something to take a look at. How much time we got left on the wall to save my little bacon today? Oh, I made it to the break. Let's take a break. 877-927-6648. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're looking at these markets still going higher. I've tried to explain what my assumption is here on the Goldman Sachs and all these others. So we're going to see if that's going to be the case or not, but we'll have to wait and see. I do not know what happened to, hold on a second. I'm doing two things at once, folks. I better stop doing the first thing first. I don't know what happened to him, but I'm going to try to find out. Okay, second thing is tomorrow's guest will be Mike Moore of Moore Analytics. And then on Friday, we are going to have, for sure, well, within 100% surety, Stan Harley of a Harley Stock Market Letter, okay? And as we live in interesting times, try to trade the patterns that you see and not what you think. That's where it gets me in trouble. So I hope you can remember to do that. Always try to do something nice for your folks that are out there. Also remember when we talked about the gold market today, high probability we made a high up there at 24.88, which was $30 higher than the old high back in May. And now we should start to correct. And silver's looking extremely bearish, folks. I didn't have a chance to show you what that looks like, but it was extremely bearish. So that's really what I'm talking about. So I hope it helps here with all these things we're looking at. We'll be back tomorrow looking at the same things, and we'll try to find some good trades. Remember to keep an eye on that British pound at 131. Also, we had another one up there. Well, the euro at 190, 81. That looks like a really beauty. That's the opposite of the dollar index. So live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow, folks. God willing, and she usually is.